Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started. Good morning. Today is Thursday, August 12th, 2010. This morning we're talking about the markets, and they're still on edge. Overnight, the Asian equity markets fell following yesterday's 2% plus declines in U.S. Stocks. Now, this has brought about some risk aversion to start the morning, but it looks like we may be flipping around a little bit here and coming back a little bit. I just want to get a reading on stocks here and see where they're at so far this morning. And as I do that, we can just talk about real quick overnight. I just want to look at the Aussie real quick. The Aussie was a little bit lower. The jobless claims numbers came in Australia, and while they added more jobs than they expected, the actual unemployment rate ticked higher from 5.1 to 5.3% as more people entered the workforce. So what that's done is that's got a lot of people talking about the fact that maybe the RBA was a little bit hasty with their rate hikes and that perhaps they raised too far too fast. So this is likely going to trigger a pause in rate policy from Australia going forward, and you can see the Aussie's a bit down today as a result of the risk aversion and the expectation that rate hikes may pause. Just looking at stocks, get back to that. U.S. markets, Dow Jones is down about 65 points, so it is starting lower to start the day, and we have dollar strength as a result. Okay, also we're seeing in Europe, we're just looking at the daily charts here. Actually, let's drop it down to the 5-minute. I think the euro's bounced back a little bit from its lows from earlier in the day. Yep, it had. It got down below 128 earlier. Okay, now we're just a little bit higher. We're going to see if we can continue the push here, although it looks like sentiment on the stochastics are still trading lower. Okay, now in Europe, they've got industrial production figures came in worse than expected. They actually fell 0.1%. There was an expectation that they would gain 0.6%. So it's showing that the economy there is still not as strong as they'd like, perhaps a little bit weak. This has led the ECB to reduce their growth forecasts going forward. And tomorrow, we're going to get GDP figures from the Eurozone. So we're going to have to see what happens. But, you know, there's some talk heating up that and rumblings coming out of Greece and Spain again, that perhaps, you know, they're running into problems there as well. So that's what we're looking at with the euro. Real quick to the pound. Well, similar chart to the euro there, only it's down a little bit lower. We can see that we just broke down through 156, which was a little bit of support. I'm just going to show you here on the daily chart. It's actually the 20-day moving average. So you can see, whoops, hello, get rid of Fibonacci there. You can see that was right at the 20-day moving average. So it looks like the trend is a little bit lower. We've got the pound is pulling back from gains that it had last week, and maybe, you know, it went a little bit too far too fast. Next week they're going to release the minutes from their policy meeting, and you know, we'll really see what they're thinking there in the UK. Lastly, let's look at dollar versus yen. You can see that it just got briefly below the 85 level. We call that the line in the sand. Now, there is some speculation heating up that that intervention is going to happen there, but the finance minister has been playing it very cool. He hasn't said that you know, they're going to do anything, but he hasn't ruled it out either. So right now we've got this pair holding here at $85 higher versus yen, as you can see, and this is actually a 15-year high in strength for the yen versus dollar. So that's what we're looking at. Now, you know, when we talk about you know, what's going on here in the global economy, everyone's starting to talk of a slowdown, and this is leading to more discussion about the old double dip recession. And this is led by the U.S. government's failure to inspire confidence in both consumers and business alike. Now, the Fed statement on Tuesday, you know, sort of echoed that those thoughts. But many here are starting to think that, hey, you know what, maybe further accommodative monetary policy isn't really doing anything for us. And, you know, some people say that Bernanke's pushing on a string. And if you think about, you know, what that looks like, if you have a string lying down at a table and you just push on one end, it sort of bubbles up and it doesn't do anything. So, That's kind of what we're saying with monetary policy. So if monetary policy isn't the answer, well, what is the answer? Well, the problem is right now is that we have reduced confidence here because the business climate in the U.S. is so bad, and this has a lot to do with the way Washington comes out with their populist anger to try and win votes from people, but it's starting to backfire as more and more people are unemployed. And you know what? It's one thing to be angry and yell at CEOs and companies and threaten them with regulation and higher taxes, and that sounds great in theory. But if they're not going to hire people, then all of a sudden it's sort of like, whoa, wait a second, maybe this isn't such a good idea. And that's what we're seeing. I mean, companies in the U.S., they can still meet earnings by downsizing. You can lay people off. You don't have to hire. You can still meet your earnings estimates, right? But it would be much better for the economy as a whole if they started hiring people. Well, what's going to cause that to happen? Well, you need to have a better economic and business climate here in the U.S. I know people are angry at the sins of the past, but it's time for people to get over it, Washington included. I mean, I've never seen such blame game politics as you see nowadays in the U.S., and that's very unfortunate. So this disconnect between Main Street and Wall Street is continuing to grow, and people are getting angry, but now that anger is starting to shift towards Washington D.C. A Wall Street Journal poll today actually shows that. So we've got this throw the bums out sentiment picking up steam here in the U.S., and we're gonna have to see what happens in elections coming up. I just hope that by the time this happens, it isn't too late for us. So that's what we're looking at today. We'll see what happens with the markets. Maybe we'll get a little bit of a turnaround here as things start to settle down, but good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.